All right, everybody, this is going to be a quick test stream. Just doing some testing on the channel here. Hey, Julia's here. Welcome, Abdullah, Vinny Castellano. Good to see you, Joan, Lemonade, Neil, Mary Lamb, Brian, Evan Weeks. So as you know, I think I'm having some difficulties with the Prism app. So I'm going to be doing some beta testing. So I think tonight I'm just going to see how long the stream will be up. Man, the one Vanderbilt looks pretty nice though. So you know what I did? I uninstalled the application and I reinstalled it and I did an update. So maybe that's the reason why. But I think it's been a little bit buggy. It's been a little bit buggy on the stream. Cara Reevy, good to see ya. Vinny Castellanos is St. Mark's Street tonight. Ooh, I think we may do that tomorrow. St. Mark's is a very exciting area in the city. But if you look across Morgan Library, I would highly, highly recommend the Morgan Library for anybody who hasn't already been. Now the interior is absolutely gorgeous, and I think it fits right into the topics that we talk about each and every night on the stream as we talk about finance. Dr. Longus is here, welcome. Samantha R, good to see you. Dr. Longus, welcome. All right, so I think the chat just went out again. So we'll see if it comes back on its own. We'll see. Now, I'm not sure what's going to be the fix to this. Maybe I need to change the streaming software. We'll see. All right, so we'll see how long it takes for the chat to come back. If it does, we'll give it maybe 15 minutes just to do some beta testing here. This is the front of the Morgan Library here in New York City. Beautiful. Now, since I can't see the chat, I'll quickly just give you guys the information that I wanted to talk about tonight. I think it's very, very important for you guys to look at this and analyze. So once again, Toll Brothers reported earnings yesterday. Pretty good quarter. I was actually pleasantly surprised. Now, Toll Brothers probably isn't the best proxy to look at as it relates to the health of the U.S. housing market, mainly because Toll Brothers specializes in luxury homes, right? But I think it's safe to say that the luxury market or luxury home builder market is actually doing pretty good. Although there were a couple things in the earnings report that was actually quite concerning. Now, they reported earnings per share up 86% quarter over quarter, coming in at $5.63. Home sales gross margins actually improved 26.9% for Q4. If we think about Q4 2021, home sales gross margins was 23%. So you actually saw some margin expansion there, which is great. However, contract signatures were down about 60% as it relates to units and 56% in terms of dollar volume, dollar transactions. But here's something interesting. About 20% of all buyers in Q4 paid in cash. So all cash buyers, a significant amount of revenue or overall sales transactions, 20% of buyers in Q4 paid cash. And the typical down payment for buyers who didn't pay all cash was about 29%. So that's pretty significant, 29% down payments. Now, if we wanted to sort of make a comparison, right, like we try to always do, I think it's, maybe the 2008 financial crisis is getting over compared to sort of what we're going through now, to be quite honest. But leading up to 2008, very seldom did you see a lot of buyers or would-be buyers putting down large amounts, right? You saw buyers with very, very low or minimal down payments. You also had a pretty big boom in ARMs, which are adjustable rate mortgages. So a floating rate, that's why everybody got hit with all these big balloon payments. And at least in terms of Toll Brothers, right? And I understand that it may not be the best proxy because it is a luxury home building company. But I think it's pretty interesting that Toll Brothers, or at least their customers, seem to be pretty resilient. I mean, 20% of all volume, all cash. Those buyers who did choose to finance, 29% down payments. So you already have substantial amount of equity in the property. So not over leveraged at all. Now it's going to be interesting to see how a lot of the other home builders report, but I just wanted to give you guys this piece of data. So once again, if you type !TOLL, TOL in the chat, the Nightbot is going to drop the earnings press release and give it a read. Take some time to read it line item by line item. There was a lot of good things in there, a lot of encouraging things about the housing market, a lot of things that weren't so encouraging, right? If we're sort of looking out into the future, transaction volumes are down. The CEO of Toll Brothers actually mentioned that is probably due to the rise in interest rates. That 30-year fixed rate mortgage was above 7% for quite some time, but we've actually started to decline here as it relates to that 10-year U.S. Treasury yield, which is bringing down the yields on that 30-year fixed rate mortgage. Once again, guys, I'm not even sure if the stream is on, but I can't see the chat. It's frozen on my end. So I'm just going to give you guys essentially everything we wanted to talk about tonight, and then we'll move on. Two other things I wanted to talk about tonight. This is the beauty market, okay? Look at these two particular companies. Number one is Ulta Beauty, ticker symbol ULTA, trading near a 52-week high and trading near an all-time record high. That's number one. Number two, take a look at ELF Beauty, ticker symbol ELF. This is also one that's trading near a 52-week high and a new all-time record high as well. I have an interesting article for you guys. If you type !makeup in the chat, once again, !makeup in the chat, it's a pretty interesting and thought-provoking article from Forbes. Now, we've been talking about this potential catalyst, I would say, for quite some time on the stream. There's been studies done, and it says that women and men nowadays tend to spend more money on beauty products, hair care products, makeup in general, during times of economic distress. So read the article, it's pretty interesting. And obviously on this live stream, we always like to try to point out and look for particular stocks that are ramping in sales and earnings growth, right? That's what drives stocks. Now there's two main things that we talk about, right? Obviously one being liquidity. Liquidity drives price, and obviously earnings drive all. And we've been seeing, as we try to navigate the stocks that are leading the market, obviously a lot of those being in the biotech sector, being in the healthcare sector, and big pharma. But I think number two is a lot of the beauty companies like Ulta, like ELF, providing pretty good earnings. Sales are ramping, earnings are ramping. So check out that article, right? I think it's very thought-provoking. So once again, if you type !makeup in the chat, you'll be able to see it. Take a look at the article, read it. I find it strange that consumers, not only women, but men as well, tend to spend more money on beauty products during times of economic distress and during recessions. And that may be one of the many, many catalysts as to why you're seeing a big sales ramp here, a big earnings ramp in those two particular companies. Now, lastly, I'll give you guys one shot of the beautiful Stephen Schwarzman building here, New York Public Library on 5th Avenue. Once again, the chat is still broken. I do not know how to fix it. But there's another thing that we were talking about on this stream, and that is this big emerging trend of the IPO market, or the initial public offering market, essentially drying up. And it's pretty non-existent. You know, from the CEO or the earnings report of Goldman Sachs, CEO of Goldman Sachs came on the call and said IPO activity is down 99% year over year, right? Which is actually pretty obvious, and it makes sense, because what really drove that IPO frenzy, right, that initial public offering frenzy, was cheap money and ample liquidity. And at the end of 2021 is when the Federal Reserve fundamentally changed monetary policy, right? We had interest rates going up. We're coming off the back of 4 consecutive 75 basis point rate hikes. That is number one. At the December 13th to the 14th meeting, we are also going to be getting probably another 50 basis point rate hike. So when the Fed turns the spigot off for liquidity, the IPO market deteriorates. And I think that's why a lot of these big investment banks have been taking a little bit of a haircut as it relates to earnings and revenue, because that's a big moneymaker for the investment banks, right? They underwrite those deals. They bring these companies public, and they charge very, very high management fees, right? So during 2021, this was one of the best years on record for many of these banks, by far, because the deal flow was incredible, right? During a bull market, everybody wants in on these deals. Companies were going public left and right. We saw this SPAC, which is the special purpose acquisition nonsense, go crazy. And all of those are pretty much trading well below IPO price. So the reason why I wanted to talk about that is because there is a very, very old saying on Wall Street that it's most important to pay attention to the IPO market, or the new issues that are going public during extreme and intense bear markets. And that is exactly what we're going to be talking about tonight. So the IPO market's non-existent. It's just almost like it doesn't even exist now. But there's a particular company that trades under the ticker symbol MBLY. Now, I want to preface this by saying this is in no way by me mentioning this. I'm not saying go buy this, right? I'm not saying go buy the stock. I'm not saying, you know, throw all your money at it. I'm saying that we need to watch it. And because usually, if you can IPO your company during a very, very aggressive bear market, it's probably a very, very premium quality. So I want you guys to do a little bit of research on this company. We'll talk about it a little bit later. I'm actually going to be writing a piece maybe about it, do a little bit of research report there. But again, ticker symbol MBLY. They specialize in the autonomous driving market, and they just IPO'd, I think about a couple of weeks ago, maybe not even a month old now. And if you look at it, sales and earnings growth is really, really ramping. Now again, I would just watch it. It's not a recommendation to buy it. But again, usually any company could IPO during an intense bull market, but usually the premium quality tends to IPO during intense bear markets. What else do I have for you guys? I think we talked about the SaaS market a little bit. So I'll tell you guys what I'm seeing in the SaaS market. And I think this really coincides with Salesforce earnings report, right? So Salesforce ticker symbol CRM, they reported earnings last week. And if you've noticed, their sales and marketing spend has been ballooning, right? And that is the case with a lot of these SaaS companies. It doesn't necessarily have to be a big mega cap, but that's okay during times of economic expansion, when companies are adding licenses of software and they're not canceling them. But it's a problem. Well, I'll give you guys a shot of the Chrysler building here. But it's a big problem when we have an economic downturn and the cost of acquiring a company gets out of hand, right? So Salesforce can afford to spend multiples of revenue on acquiring a new customer, essentially buying new customers. They can afford to do that when their churn rates are very, very low. But what I've noticed, especially in the business that I'm in, I've been getting calls from customers to cancel licenses, to reduce licenses, and are even lowering their forecasts for the next year. Saying, look, we're probably not going to need this many licenses of, our MDM product. We're not going to need this many licenses of, you know what. So I think there's going to be a couple things that I guess need to happen here. And again, this is anecdotal, but companies are going to have to drastically reduce their sales and marketing spend, or they're probably going to have to lay people off, because the numbers don't work at a point, right? The numbers get turned on its head at some point. You can't spend 12 months of revenue, 13 months of revenue to acquire a customer, right? If you're losing X amount of customers on the back end, right? So I think it's a trend we need to watch. I think that's why Salesforce and a lot of these other SaaS stocks are taking a beating here. Yeah, I think something needs to change there. We'll quickly take a look at the 10-year U.S. Treasury yield. The 10-year U.S. Treasury is right now at 3.455%. The Dixie, or the dollar index, so the Dixie tracks the dollar's relative strength as it relates to a basket of other foreign currencies. The dollar is trying to make a comeback and rally back above its, I would say, 200-day moving average, but we're still trading at 105. So I think in order for this, I guess you could say, rally to sustain itself, I think you're going to need to have a couple things happen here. You're going to need to have the dollar stay relatively weak. That's number one. Number two, I think you're going to need to see the 10-year U.S. Treasury yield remain stable. It doesn't necessarily need to go down here because it's already under 4%. We just need no violent moves in the debt market. Okay, oftentimes on the stream, I say, the stock market is a mere derivative of the debt market. Or in other words, the stock market derives its value from the bond market. So I think if we can have a stable bond market where yields, maybe they go up a couple basis points, go down a couple basis points. But if we see a major, massive sell-off in the debt market again and yields spike, I think that's all bets are off, and I think this market's going lower. The VIX, take a look at that. I think we got another bump in the VIX. I think in order for this overall general trend of the market to continue higher, I think we're going to need to see the VIX stay right around its 20 or even go back into the teens. But I think that's really all I got for you guys. Now, again, if you type !TOL in the chat, it'll bring you to the investors press release for Toll Brothers. I want you guys to read through that. A lot of good information there as we try to use that as a leading indicator for the housing market. Because if you look at the stock, did anybody notice the action in Toll Brothers stock after they reported earnings? Massive amounts of volume went into that stock. And if you follow me on Twitter, I think I posted some charts of the stock on a daily and a weekly time frame. Maybe the market is signaling to us that the housing market isn't going to be Armageddon like everybody thinks, right? Maybe it will, maybe it won't. But why are a lot of these housing stocks actually rallying here? Who knows? So I think you guys need to take a look at that. Also, the other, what is it here? Yeah, the other sort of article that I wanted you guys to read, if you type makeup in the chat, it's going to bring you to a very interesting Forbes article that talks about how women and men tend to spend more money on beauty products and makeup during recessionary times, during recessions. And I think that's why you're seeing stocks like Ulta Beauty, ticker symbol ULTA, and also ELF, ticker symbol ELF, trading near 52-week highs and actually hitting all-time record highs. Now, the last thing I'll say is look at the earnings block for those two specific companies. You have ramping and accelerating sales and earnings growth, which is sort of the magic elixir to make a stock price go higher. So while all other, I would say the vast majority or the breadth of the market is not doing too well, it's deteriorating, we're really only seeing leadership in the biotech sector. We're seeing leadership in big pharma, we talked about that, but also makeup and beauty is leading here. For those of you who are just joining, we're having some technical difficulties with the chat, and I apologize for that, but it's frozen and I can't read anybody's comments. I'm trying to fix it, so I wanted to briefly give you guys all the information quickly as possible, what we wanted to talk about tonight, and I have to work on trying to figure out a solution to this chat issue. So this is going to be a beta testing stream. We'll walk a little bit more uptown while I try to fix the chat. Hopefully we can get it back, but I'll be on for maybe about 15 more minutes. I'll try to fix it if I can. I'm sure. See 432 Park Avenue up at the front. Looks kind of crazy with all the cloud cover there. All right, guys, so I'm on my computer and I think I could see the chat. This is just so weird. I can't see it on my phone. Let me try to show you guys on my screen. Give me 1 minute. I'll try to show you guys. So here you guys are. I can see all of you, right? But unfortunately, I just can't see it on my phone, which is a big bummer, man. But I really appreciate you guys coming out. So I'm just gonna try to do some more testing here. You guys could stay on if you want. I do appreciate it. But I'm going to try to fix this. So we'll just be doing some testing tonight. Hopefully you all got the links that I sent. All right, everybody, hopefully you can see my screen here. We're gonna do a little impromptu chat here. So this is MarketSmith, right? This is the software I use. Now, we talked about how during bull markets, any garbage company could become public, right? But in bear markets, and especially now when IPO activity is down about 90%, 99%, this is a new issue. As you can see, very little trading activity went public probably about a month ago. It's called Mobileye Global. Again, this is not an endorsement for the stock. This is not to say buy it, but do some research into it. Go to the company, look at the financial reportings. This company was able to go public during this horrible, horrible time when the IPO market is non-existent. Look at the sales and earnings growth here, okay? Maybe not perfect, but you have consistent 40% plus revenue growth and EPS is ramping. And you notice, if you look at the earnings block here, this has positive EPS. Now, remember all those nonsense companies that have essentially, I wouldn't say gone to zero, but in the process of doing so? Those are the companies that everybody was trying to buy during 2021 and the like. A focus on the quality, all right? Earnings drives price long time, and so does liquidity. So when we have IPO activity falling off a cliff, you gotta pay attention to the companies that are going public now, because if you're able to raise money and find capital from investors now when nobody's allocating capital, that's a good sign. Again, not saying this company is going to do great, not saying it's going to go up, but you got to do some research into it, and it's going to be on my watch list. The chat is still broken. I'm going to try one more thing, and then maybe I'll just take you guys back to Penn Station with me. So allow me a minute. All right, I'm gonna end it here, everybody. I appreciate you joining. You know, actually, we'll stay on, but I'll just take you guys back to Penn Station. But just know that the chat isn't working. I apologize.
Something like that, yeah.
All right, I'll take you guys back to Penn Station, but just know, unfortunately, I can't see the chat. You know what I may have to do? I may have to grab one of my old phones and maybe read the chat on there. Maybe I'll try to do that tomorrow. We'll see. But we're coming by St. Patrick's Cathedral here, and we are headed up towards Saks Fifth Avenue. You can see the light show. I guess I'll give you guys a few channel updates. So there's going to be a lot of changes to the channel coming up relatively soon. Next week, I will be posting a dedicated schedule. So we will post it on the YouTube community page, so you guys will be able to see which time. So it's going to be probably a spreadsheet that you guys could download as well. It's going to give the exact times we're going to be live streaming, the days we are going to be live streaming. We're also going to be doing some standalone sort of market update videos. And because I've been getting a lot of emails and requests. Also direct messages on Twitter and IG. And if I don't get back to you right away, it's because I very seldom IG, to be honest. Anyway, so a lot of people were messaging me. I think we may be buffering around here, but I'll just talk anyway. A lot of people were messaging me saying, you know, they love the live stream. They wish they could be here every night, but unfortunately they can't. So what they wanted to do is have me post like a 15-minute or a 10-minute video every day, sort of thing, what we talk about here on the streams, right? So I think I may be doing that every other day starting next week. Again, I have to finalize the schedule. It is not finalized yet. And I do understand that. I understand not everybody could join for the full 2 hours. It is a very, very long stream. So for those of you who can't join, and maybe those of you who just want to see a little bit behind the desk, sort of like what you saw just 5 minutes ago. You saw my computer, so it'll be a screen share. You'll see me, you'll see my screen, and we'll go through some of these companies' earnings reports, right? We'll do our due diligence there and sort of give a market outlook. So that's probably gonna happen Monday, Wednesday, and Friday. I will probably post that right as the market closes, or probably a little bit after. I'll probably post that 5 o'clock Eastern time, just to give everybody a little bit of time. But the live streams, it's probably going to be Monday through Friday at 8:30 p.m. Eastern. So we're still going to be doing the live streams as normal. But for those of you, and I appreciate the feedback, and alone videos, did the lives, you have your shorts, and then you have, so I will be doing that. And, got all of your feedback. Just know if I don't respond right away, I am reading everything. I read every single email, but it's sometimes very, very difficult to read every one of them or to respond to every one of them. But just know that I do read every one of them and try to respond to as many as I can. And the other piece of feedback is you guys want to see more standalone, maybe like ASMR type videos. So I think I will be uploading maybe 2 a week, just showcasing different parts of the city and maybe showcasing different buildings, so everybody can get a little bit of what they want. Right now, I understand many of you are here because you love the conversation about the financial markets and you love seeing the city, but many of you that email me maybe only like the financial stuff. Some of parts of the city, New York City and Miami. So I'm gonna try to give everybody what they want. And I think if we have a dedicated stream schedule and a channel schedule, it'll allow us to do that. So look out for that next, probably Monday. I'm probably gonna post it up on the YouTube community page. So you know if I'm not live streaming one night, you know why, right? So we all have a schedule. You guys know what's gonna be on and when. And you also know when the, what do you call it? Standalone videos, when they're going to be up. Just so if you're not interested in them, you don't have to tune in. And if you're interested in them, you can tune in, but you'll be able to see my screen. You'll be able to see my MarketSmith, my Bloomberg. When I have access to it, you'll be able to see that. And we could sort of do a little bit of a better deep dive that way. But this is 5th Avenue. You could see the Peninsula Hotel here. We'll walk up one more block and then we'll head down to Penn Station. But that is just a quick update for you all. If you're just joining, I can't read the chat. I don't even know if the stream is still going, but apologize for the technical issues. Maybe we'll have to switch the streaming software sometime soon. Once again, this is the Peninsula. take you over towards the Jeffries building. Oh, another thing. This is also what I wanted to tell you guys. Anybody notice the action in crude oil today? Continues to sell off. So if you look at ticker symbol CL, that is the symbol for the futures contract of light crude oil. I think we may crack under $70 potentially this week. We'll see. Now, the reason why we've been watching this so closely is because of a very interesting between the XLE, which is the Spiders ETF that tracks the energy sector. This is Jeffries building, by the way, and crude oil. Now, if you look at the top two stocks in the XLE, number one is ExxonMobil, number two is Chevron. They make up about 40% of the ETF. Okay, this is very, very important. Now, fundamentally, ExxonMobil and Chevron are doing fantastic, right? Blockbuster quarters, record profits, but as the price of oil continues to decline, maybe that is a forecasting mechanism, perhaps. I'm not saying it has to be, but for potential earnings deceleration in big oil and gas. So I think if you're very, very long this stuff, right? If you're long a lot of the oil and gas stocks, this is just something you need to watch. Now, it's not all the time that the stocks have to catch up with the commodity, but generally speaking, a high oil price, high crude prices are very, very bullish for the energy sector as a whole. But it seems as if we're just entering into a massive stage 4 decline in oil, in crude. This is East 53rd Street, Madison Avenue. Now, here's something else that's quite interesting. This all comes at a time when China seems to be opening back up their economy from the draconian zero COVID policy lockdowns. This is Jeffries building, one of my favorite buildings in the city. And you would think, right, now that China is finally opening up, you may have a little bit of a bid in crude. But that's not really what the market is telling us, right? You would think if one of the largest economies in the entire world is finally starting to open up, maybe that would signal demand for crude oil would increase. But maybe the market is telling us something different. Maybe the market is forecasting slowing growth globally, right? So I think we need to watch it. I think we need to watch this. It's an interesting sort of dichotomy what's going on here with major protests erupting in China, the government finally backing off and relaxing some of these policies, all while it seems crude oil is topped, right? Now, if you look where crude was trading at back in March, I actually remember we were doing a live stream the day crude oil hit a top, and many of us in the chat were saying that. We're like, look, this has to be the top. Because usually when markets top, commodities, stocks, really whatever you're talking about, when they top, they don't merely just roll over, right? They have these meteoric, euphoric blow-off tops. And if you go to tradingview.com or whichever charting software that you use, look at it for yourself, right? Take a look at the crude oil futures contract. Back in March, you had a massive blow-off. I think light crude was trading at $130 a barrel. These are nice shoes here. Was trading at nearly $130 a barrel. Now we're down to 72. right? So if we trade in the 60s, you know, I think, right, and it doesn't really matter too much what I think you're going to see a lot of these pure play oil and gas stocks come down too. I think you're going to see ExxonMobil come down here. I think you're going to see Chevron come down. And again, they're coming off the backs of fantastic, record-breaking windfall profits. Amazing quarters. But we'll see. You know, if you look at ExxonMobil now, I think it just broke below its 50-day moving average. This is right behind St. Patrick's Cathedral, by the way. ExxonMobil, I think, broke below its 50-day. XLE is now trading below its 50-day. We'll see if it can recover. But the reason why I wanted to talk about it is because energy may be getting a tad bit long in the tooth. We'll see. We'll see. Now, I'm not even sure if we're still live streaming, but for those of you who are joining, we're having some technical difficulties in the chat. I can't see anybody's comments, so I do apologize for that. Apologize for the technical difficulty. Maybe we're still live streaming, maybe we're not, who knows? Wow, look at this. Hopefully you guys could see this. Look at how beautiful this is. This is the New York Palace. I really hope we're still live streaming, because this is really amazing. And this is right across the street from St. Patrick's Cathedral. So the guy who just walked past, let me see if I could, that is my favorite jacket of all time. This guy. I think that is so classic. It's like the classic New York business guy with the very long sort of grayish brown trench coat. 10 out of 10 on that. Love that. All right, I'll take you guys back to Moynihan train station, and we'll call it a day. I'm gonna stop here for a second just to check something. Love the dog, 10 out of 10. All right, so I checked the computer. It looks like we're still streaming. I guess it's just the on my end, the chat is broken. I think tomorrow I'm gonna have to try to do, I don't know, I gotta figure it out. I don't know what I'm gonna do yet. Maybe I'll try a different streaming service. We'll see. I think there's a couple other different companies, right? You have Prism. What is the other one? OBS Streamlabs, I think, is the other one that you could try. Maybe we'll try that. Now, when we first started the channel, Walks in Wall Street, we actually... let me go around this bus. I think we actually did start off with the Streamlabs. But I think the reason why we stopped using that was because it puts the chat on the screen way too big and like nobody could see the screen. So I don't know, we'll figure it out. If it continues, I'm gonna have to get my second phone to try to read the chat. Well, at least you guys will get to see Jamie Dimon's new office. 270 Park Avenue. Right across the street. I think it's going to be done in late 2026. I'll quickly give you guys a shot of it here. All right, let's press on. Crazy shot of the One Vanderbilt building here. Growing old. You're never changing.
I just because it's like very
Oh, look at this building. Very unique. Really, really stands out. Oh, this is the Cornell Club. I never knew. Right here. Looks really, really nice. Wow, look at the top of the Empire. All right, let's cut over to Bryant Park. See the Bank of America Tower, Salesforce Tower, we were just talking about them. Now, I really wanted to ask you guys this, but obviously I can't see the chat. But are you guys seeing in your world sort of the same thing as it relates to cancellations? Now, we were talking about how let's just keep it anecdotal at this point. I'm getting a lot of customer requests to cancel their software subscriptions. Let's say if an employee, maybe they went through layoffs, they had to fire some employees, and they're also cutting their forecasts and expectations for hiring next year too. So the reason why I wanted to bring this up is one of the ways, obviously, these big cloud providers, software as a service providers were able to grow so fast is because they spend a ton of money on marketing and sales. But now that they've been seeing a huge uptick in churn, and it's actually harder to close deals, now that's going to essentially turn that model upside down. Right? That is going to balloon. You're going to balloon your spend on sales and marketing, and you can't afford to pay 12 months, a half a year to a year of revenue to acquire customers anymore if they're just churning out the back end. Right? The business model just doesn't work. So I was going to ask, maybe if you guys are IT admins or something like that, the people that you laid off, I'm assuming you're going to cancel their licenses, right? Cancel their seats. So I think SaaS companies have to figure this out. I think they're going to need to drastically cut marketing expenses. They have to lay off some people, or they're going to have to figure out another strategy, because we haven't really been in an environment where economic conditions has forced companies to lay off employees. Right? We've been in a huge cycle of easy money, right? Very, very lackadaisical and accommodative monetary policy. But now the Fed has literally said they want to throw people out of work, right? We were talking about Federal Reserve President John Williams, New York Fed President John Williams. He said, look, we want the unemployment rate to go to 5% before we even think about materially pivoting. I think that's going to have serious ripple effects. Essentially, I'm worried about customer acquisition costs. Because if you look at the structure now, for many of these businesses, they're essentially paying for customers, right? So if the churn rate is low enough, they could throw so much money at these customers in terms of credits or sales and marketing spend. But now that we're just first starting to see, unfortunately, people lose their jobs. So again, maybe a little bit of anecdotal data there, but we'll see. Hopefully tomorrow, if the stream works, we could talk about it. Ooh, I did want to highlight this building right here. It's an apartment building. It's beautiful. Now I'm blanking on the name of the building, but hey, what's up, dude? Oh, what's up?
I hear you the whole time.
Dude, the stream isn't working tonight. I don't know why.
No,
you see the none of the chats are showing up, so we're just like kind of walking around.
Yeah, no, I hear you. I see you
up?
sometimes walking around.
No way, thank you, bro.
I was in the neighborhood. I said,
Hilarious.
I got behind you when you were like on.
Bryant Park.
Yeah. Bryant Park, and I was just
awesome,
I was
dude.
gonna stop you.
Dude,
you have
man.
some interesting stuff going on.
Thank you for watching. I appreciate that, man. Thank you so much.
Every once in a while,
Awesome, dude. Well, thank you.
But I was in the city, so I figured.
Oh, really? Well, dude, nice to meet you again.
Yeah, you
dude.
too,
Thank you so much.
Yeah, have a great night.
Thank you.
And enjoy Penn Station.
Hey, thank you, bro. Appreciate it. He's a nice guy. But yeah, this building right here is fantastic. I'm blanking on the name of it, but try to check it out on Zillow. I mean, the apartments in there are absolutely amazing. And if you get up on a high enough floor, you could see the entire skyline. Well, mini skyline, I guess you could say, of Bryant Park. All right, we're gonna make a right here. Head back to the Moynihan train station.
All right, team, I think we're going to end it here. Appreciate you coming out. Hopefully tomorrow we do not have the same technical difficulties as tonight. I wish you all a fantastic rest of the week. And we will meet back here tomorrow at 8:30 p.m. Eastern Time. Bye for now.